Hello, hello. How's everybody doing? Welcome to Ready Set Live for the week of April 27th. Today is April 29th. We've had some exciting moves in the market, so we'll be talking about that shortly. But as usual, where are you guys coming in from? How are you guys doing? Uh, yeah, it's an exciting week for sure.
Afternoon, everybody. Doc here from Greenville, South Carolina. Make Bitcoin great again.
There we are. Great.
We've had movement across the board. I mean, today's been a huge day for accumulation of all sorts of assets, and Bitcoin has been one of those. One of those that has joined the crowd with everybody else. I thought Ripple was going to run away with things yesterday.
Ah, maybe someday.
Ripple had its day yesterday. Even a blind squirrel.
Yeah. Excellent.
All right, we got folks coming in from Austria. We've got Malibu, California, South Africa, Dallas, Texas, Dublin. Good to see you, Nick.
Yeah, the price of Bitcoin is doubling, isn't it? That was bad. I know.
That's dad jokes are my eminent domain. Hey, Ricky, how you doing? Ellie from sunny Tampa, Florida. Ireland. We have Arkansas. Another person from Tampa, Florida. That makes two. Washington State, New Jersey, Romania, Australia, Camp Hill, Pennsylvania. Is that anywhere near a beach like Pennsylvania? Newcastle, our Geneva, Lafayette, Louisiana.
All right.
Sweden. Man, everybody's from. This is great. These are all places I want to visit again, or I haven't been to. All right. So, Mav, what you got?
Well, for those who are new or haven't been around for a while, we break it down. We start with the markets, and then we talk about the fundamentals and try to give you a good perspective as to what's going on, what's driving the markets, where things are going next. So certainly today's topic is all about Bitcoin and what's going on with that. Where are we going? What's driving things? We are just about we are under 2 weeks now away from the halving. It's definitely an important catalyst, but as we've talked about in the past, there's bigger fish to fry. There's bigger catalysts for the price. So we'll dig into that in a little bit here. But let's get started with the charts because certainly there's some green candles, I think.
Well, we should do that. Okay, so let's go over to the magic screen over here. So if you guys haven't seen yet today, like that would be kind of amazing. Anybody that's joining us today probably also knows that BTC is up about 1,000 points today, or about 12%. So we got through that magic $8,000 line, and this is really similar to what we went through like a year ago, because a year ago we were saying things like, oh, wait till the price gets up to this 6,500 level. It's never going to get through there. And it just blasted right through like it didn't even exist. I mean, these are volume profile resistance levels that everybody can quite honestly see. So we've been, 8,000 was a very important level for a long period of time lately. And today it just trucked right through it like it didn't even exist, which is great. So we do have a bigger picture here. If we go out to like the monthly chart, this to me is still the most important chart that's out there. And you got to excuse some of these lines that I have on here, but what we've done ever since if you go to a log monthly chart, this is what we've seen for the past 2 years. This, crap that we've been in for the past 2 years is really nothing more than a larger time frame consolidation. A larger time frame consolidation. And if we actually throw on some of the tools that I follow, such as the the choppiness index down here, this is my main energy. It's almost like a fuel gauge for markets. When markets are extremely choppy like this, when they have just no linearity to the trend whatsoever, this is when we tend to see them coil for a long period of time. This is like the spring winding up. This is what I talk about with fractal energy, the spring winding up tighter and tighter and tighter. It's almost imagine holding a coiled spring up in your hand and you're not going to be able to do it for very long. There's so much potential energy wound up in there. And then typically this is where we see the explosive moves from this. Same thing happened back here, back in 2014, 2015. This was coiling up like crazy. You can see the amount of energy this built up and it blew it all off to the top. And this is where we get into exhaustion. And we just go back and forth between this notion of range expansion, range contraction. So we're waiting for the next range expansion. We have been for the last 2 years, right? Unfortunately, with a monthly chart, you're never going to be able to time this. This is almost impossible. So what you have to do is you have to go down to different time frames. So we can go down to things like the weekly chart and understand what's happening at the weekly chart. And really what we're seeing here is over the last few months, we have nothing more than a monthly bull flag setting up. And these events are really important. The little crash that we had back in March is extremely important because that tends to almost like pull back the rubber band, almost like a slingshot. And this is where we see these explosive movements from catalysts like that, where you get too many people too short on the wrong side of the price, and it becomes a massive short uncovering, right? So you got to cover by buying back, and this is what helps to drive the price. So all of this is good, but quite honestly, we're seeing this across the board as well too. If we go out to the larger markets, what are we seeing? This is a weekly chart in the S&P 500. I mean, this is one of the strongest rallies that we've seen in a long, long, long time, and it's going parabolic lately. Of course, the Fed today basically said that we're going to keep rates near zero for an extended period of time until the economy recovers. And that is a schnauzer. We, right. So we even have the small caps. Now, the small caps are a great way to judge fund manager sentiment. So fund manager is a dude that controls billions of dollars worth of client money. And when fund managers go into the Russell 2000, this is a great canary in the coal mine that lets you know really where their sentiment lies. And today was a huge accumulation day in the Russell 2000. So as the nature of that, we also have cryptocurrency sitting on the sidelines saying, hello, why don't you accumulate some of me as well too? And so today the wealth was spread out just about everywhere. I don't think this necessarily has anything to do with the halving or the having. As we've talked about last week, it just was not priced in for a long time. Now, maybe as we get closer to that, we might start to see that effect coming in. But really, across the board today, we're seeing accumulation. There's no shortage of money. That's what you guys have to understand right now is that there's no shortage of money that's out there. And this is central banks have enforced this. And until people start dumping dollars, this is still going to be driving things. Okay.
Yeah, well said. That's something we've talked about a lot recently. Sort of the tenuous position that the dollar's in, and certainly during crises like these, we see sort of the macro forces play against the dollar rather than for it. Or if it does play for the dollar, it puts it into a position where it becomes unsustainable. They have to continually print more and more, and starts to be a case for looking beyond the USD as a reserve currency. So it's an interesting time for many different markets and movers. Yeah, so we'll transition real fast here and excuse the mess.
Have
We're
you got
having
something? You got
yeah,
something for us?
I do.
All
So
right.
as usual, I like to talk about what's going on in the markets. I don't pay attention to any of that charting stuff. I think it's a little, like tea tree leaves and all that.
Charts belong with the rest of the sunken treasure in the bottom of the sea, right?
Yeah. And yeah, I think today, certainly, as we see Bitcoin getting a little spicy there, we start to have to think about, as Doc talked about. Yes, maybe there are some reasons people might point to, like the halving, but I think there's more that we can look at that's interesting in the face of that. And I'll piggyback off of that and talk about some of my predictions as to what's happening next and what you should be paying attention to. So, one of the things that we talk a lot about on this channel and in our community, Ready Set Crypto, is a lot of on-chain analysis to understand what is actually happening in the Bitcoin network and how does that translate to the actual price, the dynamics that you can look at it. It's almost like doing technical analysis on fundamentals, is to look at the Bitcoin network, understand it, understand what people are doing on the Bitcoin network, and use that as a heuristic to predict, where's the price going, how is scarcity driving up sort of this price of a deflationary asset, all these sorts of factors. So one of the big ones, I know this is kind of a scary looking chart, but if you look, the 10-year HODL factor has increased over the past year and a half or so. Basically, the more of the purples and the blues here, the more that people are holding on to those, Bitcoin as an asset and continuing to just sit on it and not sell it, not move it, not try to catch the bottom or sell the top. They're keeping it as a store of value, an a asset that appreciates value over time as well. So that's really important to pay attention to as we, even during this long trend of, it was going sideways and down, we still saw the, iron hands kind of people with the big bags just sitting around and saying, nope, I'm gonna wait this one out. I'm going to, take my time and I'm sitting on a nice stack of sats and I am not going to move that. And, because I know this is going to eventually recover. I know that we're eventually going to see some movement on this asset class, Bitcoin in particular. So that's something that more so I would say than a singular event like that having does. Just a trend like this plays so much into, especially over time, how this asset appreciates. So another thing we can look at is sort of the, I suppose, mix of holders versus, what is essentially the long-term investor. How are they accumulating or are they not? What are they doing? And right now, as we've seen in the past, basically month, 2 months, we are seeing long-term investors, those sorts of investors that represented the purples and the blues in that last chart. They've been accumulating more than 80,000 BTC per day, which is just insane. And especially as we've seen some pretty dramatic panic-induced moves recently, right? It's been kind of volatile in Bitcoin, every other market, sure, but people were quick to point out, well, Bitcoin is moving down 40% in a day. It's clearly dead. No, as we see today, it has the potential to go right back up in the same direction, opposite direction. So, um, given those sorts of factors, given a lot of the other things that are going on right now, we're seeing long-term investors start to make lots of acquisition into their position sizes. So this is another chart I think is very important, and it's kind of hard to decipher. So I'll help you out here. Essentially, the what this orange line here represents is the total supply last active between 1 month and 3 months. So this means someone who was active 1 to 3 months ago, and then they haven't done anything since. So they acquired some Bitcoin, and as these boxes sort of are meant to indicate, basically people bought the bottom around the March 12th to 20th period. Right when we saw sort of a absolute staircase fall for Bitcoin's price. Certainly, the middle of March there was pretty tenuous as to, well, is Bitcoin going down to 3,000? 1,000? Is it going to zero? There's a lot of those questions, but during that time period, there were people who saw the opposite. This is just going to rebound. I'm going to take sort of the contrarian position. I'm gonna load up here, and as we can see that more and more of the supply in sort of the last month to 3 months, they've been holding. They bought the dip, and they have not been. They're anticipating that it's going to continue to go up. So these sorts of forces give us basically two takeaways. First, that like I said, traders bought the bottom and have been holding on to their new positions, which is really good for long-term speculators. Over the next year or so, to say this is sort of the trend that we're moving into, just from a fundamental perspective. Secondly, as the market recovered, there's a wider change in sentiment among the market participants. Basically, people who are looking 6 months to 2 years out, especially those people that have been, very in favorable of like the halving and sort of the macro movements, they see Bitcoin starting to really make moves in the 2021 to 2022 period. Over the next 2 years, basically, we're going to see Bitcoin's price really appreciate during that time, just based from the fundamentals to the technicals, all of it. Very favorable sort of conditions on both sides of that. So yeah, that's something I would say is good to look at. We could also look at the past data, which has been somewhat characteristic as to where we are, but actually in the past couple of weeks, we've seen Bitcoin moving in ways that it has not leading up to previous halvings, where the last two halvings we saw, the last couple of weeks before the actual event itself, Bitcoin's price went very sideways. It didn't do much, but clearly during these last couple of weeks, we've seen Bitcoin all over the place. And in the same token, we also sort of anticipate that it's really not what we want to pay attention to is really not what leads up to the event, but what comes after. And what comes after, at least based on historical data, is that we see Bitcoin it has made two of its strongest bull markets, strongest bull moves following a halving event. So, and like I said, this all comes in the 6 to 2 year mark out from when this halving event occurs, because quite frankly, if you look at the miner revenue, it's very clear that after these events sort of falls off a cliff there. And so we are definitely approaching that period now where with the exogenous market forces and sort of the endogenous ones of miner dynamics, and just as people are holding on to more Bitcoin as it becomes more scarce as an asset class, it just drives the price up. There's really not much there, to figure out. It's a pretty strong case factor as it relates to, if people are trying to find ways or places to park their capital in times of uncertainty. Certainly, as the entire market is just this volatile mess right now, people are starting to look at Bitcoin as being a potential. I wouldn't call it a safe haven, but certainly as a hedge, both for reflation's sake, in the face of what central banks are doing, but also just as sort of this uncertainty, and as the world sort of embraces inflation. So yes, this is something we want to look at. We also could look at the actions of whales, which again, it's something we talk about a lot on this channel. It's like, yes, whales exist. Yes, they do quote unquote market manipulation, but at the same time, they're doing exactly what you're trying to do. They're trying to find ways to find edge. You're seeking alpha. They're trying to utilize their position as best as possible. So they're just playing the game. And furthermore, there's no market on this planet that is, free from market manipulation. So rather than try to pin it all on the whales, or blame them for what they're doing, instead look at what they're doing, understand what they're doing, and understand how they're moving the market, but also how they're responding to the market. And if you look at nothing else than that, you can see that during this time period, in the last year or so, they've been making massive acquisitions of Bitcoin, very similar to sort of the lead up that was transpiring right before the last halving, but also sort of this time period where we saw lots of, there was just a lot of excitement in the crypto space in the 16 to 17 period. So it was a very hot time. And I think there's a lot of reasons, which I'll get into in a little bit here, that we're going to see sort of resurgence in interest in crypto technology, just innovation in general. So it's a very exciting time. So that's a great segue into some of the predictions I'm taking out of trying to extrapolate, looking ahead, not just at Bitcoin, but in general, some of the major macro forces I think are going to be driving, adoption for this space, but what happens in general. So let's get into that. First, though, is the sort of takeaway from all this. Basically, as I've said, this sort of instability aspect, the uncertainty that's prevalent all throughout the market right now, is as sort of a mirror industry or space. We're taking this as an opportunity. We're seeing that crypto is reflective of sort of this fear and panic that's in the larger markets, and we're acting upon it. And that's something that we've said for a while now, but certainly during a crisis, everything is correlated. But now that things are starting to get kind of interesting, starting to move in their own directions, that's where we start to see renewed interest in terms of the market moves of the crypto market. So it's definitely a time to be paying attention to this space. So as I was saying, predictions relating to sort of the big moves, what's going on right now. How can we, if we look into the future and we start to try to extrapolate, what is the post coronavirus world look like? Sort of what's going to transpire? How is that world going to change from what we knew to be the world? Even just a couple months ago. I mean, 2020 has been quite a roller coaster. Yeah, it's it's only April too, which is great. You kind of lose perspective of that. But yeah, if you look ahead, if you start to think about things, I think one of the big predictions we can start to look at is sort of what you could relate to or call the end of globalization. And yeah, maybe that seems a little bit dramatic. It does seem like the gut reaction is, well, that doesn't make any sense because we've only become more and more of an internationally global trading network. There's no way that that's going to just all of a sudden recede. We're not going to all just go hide behind our borders. This is modern capitalism, is to have international markets like this. And yeah, I totally agree with that. But at the same time, it's as we've seen supply chains absolutely guttered by the the way we've seen supply shock and demand shock and consumption halt all at the same time. It starts to make people question this reliance on outsourcing, this reliance on very fragile supply chains that are world spanning, especially as it relates to things like, I don't know, medical gear that countries found they're not able to produce in their own borders anymore because they outsourced all that. So it's we start to see that push things in a certain way. At the same time, we're seeing an uptick in automation, something we've seen through past recession events and crises from an economic side, is that during those times, automation does sort of pick up in terms of adoption, and just lots of capital is put into that. And I think that's one of the big things we can start to look at for what's going to transpire very quickly. As we're going to see basically automation help to basically reduce the cost of goods produced, so much so that countries will be able to start retaining some of that manufacturing, bring it back within their borders, and start becoming manufacturing hubs again, or at least to have manufacturing centered closer to their borders. For example, Mexico being more of a production hub than China, at least in reliance for the United States. So this is a very interesting macro move that's going to take years to play out. But I think it's one of those things that if we pay attention to, we start to understand the implications of a very different take or view or version of globalization than what we've been accustomed to. We can start to extrapolate other major trends. So another one I think is has been very apparent with these past couple months, especially here in the United States, is this sort of welfare state, in part, that we start to see more and more of a demand, I suppose, for things like UBI, especially in the face of uncertainty, especially in the face of automation, and simply, yeah, it's once you turn on that sort of I suppose tap of socialism, it it becomes impossible. It becomes political suicide to turn it off. So this is something that we're unfortunately going to see more of, but unfortunately we also can't take back. It's one of those things that it's a one directional kind of thing, and yeah, I think it's in part what we see that doing is starting to, I guess, split apart or widen the dynamics, the split between some of those who are lower class or lower ability versus those that have more access to capital and things of that sort. It becomes just this wedge that further divides society. What sort of backs that up is I think another prediction we could look at is that in the same token, once you let the UBI cat out of the bag, the same thing is true for QE Infinity. We are only going to see expansion of sort of this fiscal and monetary policy that further enables the bad behavior that led up to this. The sort of the stock buyback, just moral hazard, redundant paradox where it's like, well, yeah, we have to bail out the corporations who then know that they can act badly. So they keep taking risks and they keep, buying back their stock and propping it up, which leaves them very vulnerable for, market disruption like this. So we have to go back and bail them out again. Essentially, at this point, I cannot, in good faith, look at fiat markets and believe that, they are quote unquote free markets. Because if the government is so willing to, basically bail out and prop up using monopoly money, then at what point do you see that as a truly free market? At what point is that a free market? I don't think it is anymore. It's sort of this. Well, it really has become the new game. The central banks are really evolving in ways that I don't think we fully understand just yet. But certainly in the past couple years and past couple months, we've seen the role of the Fed here in the States change drastically. And we have to be paying attention to that, especially in a space that values deflation and values sort of this, just more rational way of looking at economics than modern monetary theory and QE infinity. So, anyways, these are very abstract sort of trends, and I know that they're kind of hard to digest, but it's something that we have to pay attention to because it's one of those things that is diametrically opposed to the role of cryptocurrency as an economic factor, but just how society and economics are evolving in general. Another thing, if we want to look at more of the societal impacts or try to extrapolate some of the things out, one of the things that I think is going to be, if not the thing that's going to help with blockchain adoption, and also just one of those really important innovation or adoption or just proliferation events that are going to happen, is that we're going to quickly see this sort of evolution of a narrative where, similar to the no-fly list for, being a terrorist, I could fathom, or, we could definitely envision a world where, well, if you don't have a certain virus vaccination, if you aren't, up to snuff, well, you can't come into this country, and that quickly becomes a case of how to control that data, how to ensure that it's tamper-proof, because anyone, any institution, any individual person who is seeking to collect that data, use that data, store that data, any of it, they have ulterior motives because that data is so powerful, especially when you combine that with individuals' financial data. That's one of the things we talked about when sort of Libra was first coming out. Is this has huge implications for the future of just how how people have ownership over their own data and who has the right to that data. So yes, I think this is one of those things that blockchain, a decentralized database of things like health information or vaccination records, any of that stuff, that has so much of a role to play versus a more centralized solution that could easily have ulterior motives and things of that sort. So don't want to get down that whole rabbit hole of vaccines and all that stuff. But this, I think, is one of those things that's going to be a very interesting discussion and conversation, especially related to this space in the coming years. One other thing to talk about is sort of this dynamic. Work itself is changing. Work itself is evolving faster, I think, than anyone could have anticipated. But one of the things that I think is so apparent is that where it was once that the working class division was based on the quote unquote collar, color of your collar, blue collar, white collar, etc. Now it's whether or not you work in the cloud or on land. So that is the working class division in this day and age, and it's going to further. I think this is only going to be exacerbated as companies are able to cost cut through both automation as well as just move a lot of their services and their revenue into more digitally based models. So this is really the only way, or only place that we're going to see massive job growth in the coming years, I would believe, because quite frankly, just look at the S&P 500 over Q1, the earnings. It was down 15%, and based on the projections for Q2, we're going to see the entire S&P 500 down negative 30% overall in terms of earnings, which is catastrophic. But if you solely look at the tech sector, the technology companies that are represented in the S&P 500, they're only projected to be down maybe 1% or maybe even potentially positive for Q2. One of the worst Q2s on record, if not ever. So that should tell you a lot of who is going to ultimately be the winner or winners from what comes after sort of the crisis and how things develop from here, but also just how investors, the market, just a lot of things are sort of coalescing around the forces that are inherent in being a tech company, being a data focused company in 2020. So it's yeah, something that's I think people are just now waking up to or starting to understand, but it's a big one and something that we're in line with all the other predictions that I just talked about. We can kind of see these forces all are kind of linked in some way, and we are right at the heart of this. But at the same time, it's these are big changes happening really fast, so we have to do our best to understand them. So before we take some questions, I do want to just say that we just launched a new service. It's called Ready Set Trade. It's pretty awesome. We talk about things like this all the time, and we specifically with Ready Set Trade are looking at the equities market, where Ready Set Crypto is focused solely on cryptocurrency and future innovation, future technology, things of that sort. Ready Set Trade is more around trading the market, having consistent income through trading, using options to be able to develop a system, ideally to be generating $100 of profit every day. So it's something that we're still getting off the ground, and to represent that, if you'd like to join us, you can do so by using the code LAUNCH at checkout for 20% off for life. Definitely a really good deal because we still have a ton of members who joined us with Ready Set Crypto when we launched 2 years ago. They're still at the introductory rate, and they're proud of that, and they tell us that all the time. So it's really cool, and we like to respect those that help us get off the ground and launch cool projects like this. So
Hey, we
anyways,
got a futures trader coming on board next week.
and we do, yeah. So we're actually expanding the team, and we're doing a lot of cool stuff. Also, if you just want to sort of toe the water and see what we're doing, in the description below, there's a link to get on our Discord for Ready Set Trade. So you can kind of see a little bit of what we're doing, get a sort of sampling of that. So you can kind of see how we're, what we're doing on a daily basis and how we're doing it. And yeah, again, we're still just getting this off the ground, but it's, I think, the right time to be talking about something like this because the markets, how you make income in 2020, I think trading is one of those income sources that everybody has to at least have some understanding of or way to do because it's getting more and more of a risk on environment. Things like crypto, things like forex, things like options, which were once seen as being very risky and things you should stay away from. They're sort of at the forefront now because risk off, things like bonds, things like savings accounts, things like retirement accounts, they're not making anything in a world that's increasingly about inflation and increasingly, this sort of consistency is a dead concept. So, yeah, it's something that we think is so needed and increasingly in this time and age. So, anyways, man, I only meant to do like 10 or 15 minutes, but I always go a little bit over. But thanks for
Yeah,
sticking around, guys.
somebody's got a great question there about how much capital it takes to earn $100 a day. I think the the presumption behind that question is that you've already got you're just got a black box system and you're shoving capital into there and you're looking to get a certain defined return out of that. It's going to be different for everybody. So, like if you've got a $2,500 account, earning 4% a day, I think, is a little bit too much risk on something like that. I mean, it could be done. Theoretically, you could do that. But in my experience, it's like somebody that loses the very first day. And I would say that you should be prepared to win at like a 60% clip. But if you lose 4% of your account on the very first day, chances are you won't do it again. You'll say, whoa, that that's that's painful. I expected 100% winners on every day, which is never going to happen. Every system is going to have drawdowns. You're never going to have 100% winners. Or if you do have an extremely high win rate, typically what you'll have is you'll be eating like a bird and crapping like an elephant. So you have these little tiny profits on good days and then devastating losses on the bad days, which is usually what most retail traders do. So it's all about finding that system that works for you, finding the one thing that works for you, tuning in that capital. I mean, if you've got a small account, how much could you do with even earning $10 a day on a consistent basis? You'd make, exponential growth on there if you're just consistent. And that's the point that we make. So really it's going to be a little bit different for everybody, depending on their capital, depending on their risk appetite, depending on your ability to drive a system. But it's not a black box system that we just plug you into. We work with you to help you build a system.
Yeah. Yeah, I think it's all about reducing risk where possible, but also using liquid markets to, implement some, sound strategies. So yeah, we're proud of what we got so far, but it's definitely something that it it's a constant machine that we have to tune and make better. And so yeah, I think this is especially in this day and age where things are just all over the place. Uh,
We're not just running a bot. What we're trying to do is we're trying to teach you how to fish, right? We're trying to teach you how to spot edge and run a system and be professional in your approach towards something. And there's one very narrow path to follow on something like that. There's only one way to do it, to work with the human brain, to work with the subconscious, to work with risk assets like this. And this is what we teach. So somebody's talking about earnings. Actually, there's some interesting. I'm going to share the chart on here and talk through a couple of earnings that just came out that you guys might be interested in. Let's see if I can get the right chart here. Is it this one? I think it's this one. Okay, Microsoft just reported. Did I do this right? Okay, so yeah, Microsoft just reported they're up $7. Facebook just reported. Look at that. They went from 194 up to 212. So sorry, I'm talking about stocks here, guys, but these are big. Somebody was asking about earnings. We also have Tesla. Let's see if Tesla came out. Whoa, 800 up to. I mean, this is almost 10% move. Look at this. These are risk assets, guys. Facebook. Did we do Facebook before? Yeah, we did Facebook. Microsoft. Okay, Twitter. Here's another one that just reported, and they're from 31 to 32. Yawn. No big deal, right? So there's some big moves happening in this type of stuff. I typically do not do earnings trades. Earnings trades are 100% coin flip gamble. We don't do gambling. We do actual trading where we find edge behind something and seek to capitalize on that edge.
I mean, if you want to gamble,
Well, a lot of people do. A lot of people associate trading with excitement and adrenaline and fun stuff like that. If you're trading the right way, It's not fun. You're not sitting here whooping 1 minute, pumping your fist and stuff like that. And then, and like in utter despair the next day. It's not like that. You don't go through these emotional highs and lows. You pretty much just are even if you do it right. And it takes training to be able to do something like that. Because otherwise, you're going to be very emotional. You're going to be all jacked up about things. And typically, when you're emotional about a trade, you're going to be following the herd. You're going to be chasing the highs. You're going to be selling off in the lows. This is all stuff that everybody does because nobody is taught how to manage risk. Nobody grows up in a household that says, "Son, I want you to go play out in the freeway. I want you to go learn how to manage risk." Nobody does that, right? So we're all taught how to be cautious and don't take any risks. And then we get into a live market environment and we act like chimpanzees. We don't know what the hell we're doing because we're trying to be safe. We're trying to be conservative, which is going to make us trade not to lose, which means that you will not win. And so there's a lot of things you have to understand about doing. There's only one way to do this, guys. There's only one very narrow path to follow. So be very, very careful. You can just see through some of the comments tonight that people need mentoring. People need to be shown how to do this. It's not something you pick up off of YouTube. So some people are saying, why the pump today? The pump today was basically across all risk assets across the board.
Yep.
I think a lot of it was driven by the Fed today, basically saying, yeah, we're going to print money. We're going to flood the markets. We're going to flood the streets with money until the economy recovers. And then we don't care what the hell happens after that. But in the meantime, literally, there's free money sitting out there for those of them that can get that. We're at very, very low rates, and they're going to go into the leverage markets and they're going to do the same thing they've been doing for the last 12 years. It's no secret. So you can complain about it, like, oh, these guys are just, buying back their insider shares and, they're taking advantage of these markets. You can complain about it or you can, join it. So that's, I'd rather do something about it than sit there and complain about it. What are the effects of earnings on Bitcoin? Zero. There are no earnings on Bitcoin. So that has nothing to do with that.
I think he's asking if earnings will transpire or have sort of a relational.
No, there's no correlation at all. Yeah. There's no correlation at all. I mean, earnings are viewed as it's a risk event. It's earnings come out. There's a whisper number about things. People price in the expectations, and then if you play the game, this is all just a big game, right? If you play the game, you blow away the expectations. And then usually this is where the retail jumps in on the good news for all these stocks and they get faded the next day. So a lot of these stocks that we're talking about today are going to get crushed tomorrow because all the good news is already priced in. And, welcome to the jungle. And it happens again and again.
Yeah. I suppose you could make the argument that, following sort of this gambling season of earnings, we go right into the halving. So there's going to be, I don't know, maybe some sort of coin flip mentality as it relates to the actual halving event. But that, I think, is not a correct understanding of what the halving is or what Bitcoin does in general. There are no surprises when it comes to Bitcoin. There's no earnings reports. There's no PE ratio. There's nothing to speculate on as it relates to some sort of, I don't know, event like that or anything like that. Everyone knows what's going on. Everyone has access to the information collectively. So Bitcoin is, if you look at it that way, is one of the most boring assets, if not the most boring, other than maybe gold, to look at. But certainly we, as I talked about, yes, there will probably be some sort of buy the rumor, sell the news kind of event or action following the halving event. That's the least interesting thing, in my opinion. What really happens is the like the weeks and the months that follow the halving, as scarcity becomes more and more of a factor. And yeah, if you price out 12 months from now, that's when things get really spicy as it relates to the price.
Guys, I mean, I did this in the newsletter the other day, but because I think it was maybe this weekend or something, and I talked about the halving, and I was mystified because it's just not priced into
Yeah.
this event is just not priced into anything that I look at that's a forward looking event. We talked about the option chain. We were here in this room last week talking about the option chain and the forward pricing event because option chains can give you sort of a forward view of what the market thinks about something, which is really quite an edge if you think about that. And I did not see any kind of forward move priced into that, which just is shocking. So it's kind of like I'm left to conclude based on looking at the old two halving events that we had from what 2013 and 2015, something like that, that we didn't get a move until after it happened, where people sat around and went, huh, wait a minute. So there's only half the supply now. Oh, like they just didn't get it before that point. And I think that's I think that's one of the things that's going around right now. But quite honestly, the larger market just does not care about the halving right now. That is what I'm seeing in the numbers right now. So we may see a very similar kind of thing happening where after we get past this event next month, all of a sudden people scratch their head and go, oh, wait, so, oh, I get it now. All right, cool. And then, we may see more accumulation coming in, but that's what we've seen is more rebound accumulation after the event on the last two halvings.
Yeah. I would say the most important question to be asking about Bitcoin right now and crypto assets and all sorts of alternative assets right now is the central question. What are people asking right now? What is the one central question everybody wants to know? Basically, can we reopen the economy? Will that happen by the end of the summer or anything like that? Uh, if that is the case, then we'll see stocks go parabolic or whatever. They'll continue to do what they're doing right now. Um, if it's not, if we're still stuck in this limbo state, and I've seen this chart sort of passed around where everyone sees like the peaks starting to form. Make sure you're looking at a linear chart and not a logarithmic one because logarithmic ones will always do that. But regardless, yeah, the central question right now for the next 6 months is, are we past the worst of it? Can we start to see economic recovery and progress? Or is it still going to be the case that things are going to be slow? Are people still going to be scared to go out of their house 6 months from now? Things of that sort. And so that is more prescient than anything else related to what's going on in this space, what's happening with
I
earnings.
got a question for everybody in the room that's watching today. Can somebody help me understand why somebody would be driving by themselves in their car with the windows up wearing a mask? I don't get it. It's like I want to just stop the dude and like, look, there are not like clouds of this crap like, that you're going to drive through or anything, you know. Wow. So,
Oh my.
questions of life that I'm still trying to understand.
Yeah. Wonders of the universe. So
That's that comes with part of the job is like trying to understand human behavior. If you want to have an edge in the markets, you have to understand what crowd behavior does.
yeah.
Wow. And so, I mean, man, if you want a crash course on crowd behavior, look at what the world has gone through over the last 2 months. Look at how people have managed their assets over the last 2 months. And that's a crash course right there. When the crowd sees one way, if you can go the opposite way and if you can think differently, that is where all the edge is in these markets these days.
Yep. Yeah. Yeah. I think where we were, that chart I was talking about earlier, where Bitcoin was down 40% in one day, and middle of March, no one wanted to talk about good news. Nobody wanted to talk about the positive perspective of things. Everybody was addicted to fear. Nobody wanted to have a sort of light-sided opinion of anything. And now nobody wants to talk about fear. It's so funny to me that this is this cycle we go through all the time. We like to say that history doesn't repeat, but it rhymes. It's this sort of pendulum swing that we see that happens all the time. And yeah, more just as much as you try to be against the herd, it's also about this sort of pattern recognition, where you can see these patterns, these cycles. Uh, ah, there we go. That's another pattern. Every year we celebrate a birthday, which
Is that, can you guys read that or is that backwards? So let
Probably
me try
backwards.
the other way.
Yeah, there we go.
Okay. So we got, and you can see this stuff coming out. Yeah. Mav is
Ah,
coming up on a birthday coming up next week. So make
this is
sure you guys wish Mav a happy birthday.
it's untrue. It's false news. I'm a robot. I'm plugged
You were
into the
hatched.
consciousness. Oh my, cool. Well, thank you guys. I appreciate you sticking around. Yeah. Okay. Cool. Well, let's see. We'll take a couple more questions and then we'll get out of your hair here and let you get back to
If you
the
have
wonders.
here.
Yeah. Yeah.
Hey, that's optional, you know.
Yeah.
Tell a man, go away. There we go.
Yeah. Oh, cool. Thanks, guys. I appreciate that. Yep.
Okay.
All right.
Thanks.
Cool,
I
guys.
appreciate you guys like weighing in there and letting me know because it's like I just don't get it.
Yeah. Well, that's the
I'm like,
thing is it's all about trying to understand 1% of how things are changing. Seems by the day things are moving. So, anyways, guys, thank you so much for
good.
hanging out with us, and as always, appreciate you being supporters of this channel and what we do. Try to keep it honest and simple and uncomplicated, because we live in a honest, non-honest, very complicated world, don't we?
Here we go. Here's a collective fist bump. There we go. Bam. Thanks, everybody.
Cheers, guys. Have a good one.